The financial frontier is always full of both unique dangers and impressive opportunities. That has never been more true than in 2025. With Q1 now fully underway and a new administration in the White House, people seem to have one question at the top of their lists. What does the economy look like this year? This is Focused Economics, and today we've decided to take a look at several of the major factors that go into that question and see what answers we can find. Tariffs. Since the campaign trail, Donald Trump has been talking about boosting the American economy by implementing tariffs across the board and levying extra heavy tariffs on goods imported from opposing countries. In his first few weeks as president, Trump began fulfilling that promise with a 10% tariff on all imports from China. In a surprising move, however, he also put a 25% tariff on all imports excluding energy from Canada and Mexico. This move shocked some, but others who were paying close attention may have seen it coming. Trump has long been hard on Mexico, claiming that it's time they carry their own weight and that they've been relying too much on the United States for economic and military support while not living up to their promises when it comes to issues of drugs, crime, and illegal immigration at the border. Similarly, Trump took a hard-nosed approach with one of America's closest allies, Canada. Trump has made it no secret that he feels his country's northern neighbor has been getting a pretty sweet deal from their partner to the south, and feels it's time for the snowy giant to contribute a little more support to American interests. In return, the two countries fired back with retaliatory tariffs, as did China. However, it seems the tariffs may have been the fire needed to bring the three nations to the negotiation table, as almost immediately the trio paused the tariffs for 30 days and began discussing what it would take to return to regular trade conditions. In China's case, however, the tariffs appear to be indefinite. What does this mean for the American economy? Tariffs are a heavy negotiation tactic, with the implied intention being that tariffs placed on imported goods will deter buyers away from the imported products to the now more competitively priced American-made versions. And while the intention is well-meaning, it does inevitably mean the cost of goods and services could go up dramatically. The cost to make things in America is almost unilaterally higher. This is why many of these industries that are being hit with tariffs outsourced their production decades ago. But many experts agree an attempt to recenter the American production line could begin with a series of tariffs and ultimately make American-made products cheaper in the long run. For American-made products to become the affordable norm again, however, there would need to be more measures put in place over the next several years to help support the American production systems. In the meantime, of course, the trade war with China and potential trade wars with Canada and Mexico will have a big impact on the average American's wallet. Whether this will turn out to be the beginning of a brighter economic future, however, rests upon the steps made by the administration over the next several years. Grok 3. Elon Musk is in the news at least twice a day lately. Whether it's Doge-related or something is being unveiled by one of his numerous companies, the guy always has something big happening. One of those big things is Grok 3. Grok is an AI startup designed not just to keep pace with its peers, but with the express purpose of outperforming them. Musk's early claims are that the new model, Grok 3, beats ChatGPT and DeepSeek. But what does it do exactly? In the beginning, it was largely a search-based product, but it has since been expanded for applications across the board, showing particular success in the fields of science, math, and coding. According to the other founders, the model benchmarks higher than Google's Gemini, Anthropic's Claude 3.5, ChatGPT 4o, and DeepSeek version 3. Grok 3 is also currently available for use at a reasonable $40 a month, meaning while the startup continues to improve and fine-tune the model, the AI will already have the potential for generating a profit. This is great news for investors in not only Grok, but Musk's other endeavors, as he continues to prove he is a stock market darling, especially in the world of tech. The world of global finance is a big thing with lots of moving parts. Sometimes it can be hard to keep track of it all. We here at Focused Economics make it our job to consolidate and streamline all the necessary information, making it easy for you to get what you need without all the fluff and wasted time. So give that subscribe button a click, and we'll get back to keeping you informed. Airline industry mayhem. Commercial aviation accounts for over 10 million jobs and 5% of the American GDP. It is a huge industry, and changes there can mean big changes for the American and global economies. In 2024, Boeing took a big hit, suffering the effects of decades of cutting corners and sloppy business practices, resulting in mechanical and engineering failures, which led to a significant loss of profit and faith in the future of their products. In 2025, the aviation industry had hoped to bounce back bigger and better than before. Last summer, experts had projected there would be some setbacks, such as the impact of green energy initiatives and a dip in American air travel. But they were also expecting continued growth in foreign travel, especially in Chinese markets and during the peak tourist season. Those changes were expected to largely offset, with a slight advantage breaking in the favor of the airlines. However, a crash on the tarmac in Toronto has once again made travelers and investors nervous. According to Reuters, on February 17th, a Delta Airlines regional jet operated by affiliate Endeavour Air flipped upside down upon landing at Canada's Toronto Pearson Airport on Monday amid windy weather following a snowstorm, injuring 18 of the 80 people on board. The crash could have been much worse, but the fact that it comes mere months after the big mess with Boeing raises some concerns with travelers. And as you might guess, when travelers are nervous, it means investors start watching much closer. While this is far from an apocalyptic event for the airline industry, it does mean that in Q1, people are already watching planes with a suspicious eye. When combined with the growing concerns that air traffic control services are understaffed and underfunded, and now being under the heavy hand of DOGE, things could get dicey for air travel in 2025. None of this spells explicit disaster, but when such a large part of the GDP is juggling various large-scale issues, the economy definitely takes notice. Medicaid. As the new administration finds their footing, the GOP also finds themselves with a majority in both houses of Congress. One of the first things on their to-do list is finding ways to cut spending. Among other cuts, they are considering an unprecedented cut to the Medicaid program. Medicaid is the United States' largest health insurance program, covering over 70 million people. While this would free up funds on the bureaucratic side of things, this could have more far-reaching effects for the economy as a whole. If the federal government reduces the amount spent on Medicaid suggested, states would be faced with a difficult choice. They would either have to slash their Medicaid budgets, impacting the coverage and quality of that coverage, or covering the extra costs out of the budgets for education, social services, and other vital programs. For people who rely on Medicaid, this would mean paying significantly more out of pocket for healthcare and insurance coverage. While this would be great news for the medical industry, the economy as a whole could see a dip in spending that lasts for years. If households run out of discretionary spending because of medical bills, it could heavily impact industries such as travel, leisure, housing, and entertainment. Overall, 2025 may be a tighten-your-belt year for the average American. For the average investor, it may be a year of watching and waiting rather than risk-taking. The world of tech is booming, and global politics could be ushering in an era of better trade after overcoming a few hiccups. But just like every year, there are some things to pour into and some things to avoid as an investor or entrepreneur. So, what do you think will have the biggest impact on the economy in 2025? Sound off in the comments, and we'll see you in the next video.